This video, I want to talk about how to use large cap, mid cap, and small cap stocks for a well diversified portfolio. How can you use them? How would you use these different uh, cap stocks uh, to craft a well diversified portfolio? So diversifying your portfolio across different market capitalization, that will include large cap, mid cap, and small cap stocks, can enhance risk management and as well as some potential returns. So each category plays a unique role in your investment strategy. Each of them has a role to play in your overall investment strategy. Let's consider number one, large cap stocks. Large cap stocks. So large cap stocks incorporates stability and reliability. Stability and reliability. So large cap stocks, typically companies with market capitalization of over $10 billion. They are often leaders in their industries. They tend to be more stable and less volatile than smaller companies. And when it comes to income generation, many large cap companies pay dividends, offering a source of regular income, which is appealing for conservative investors and for those who are approaching retirement. It also, incorporates lower risk. It has lower risk. So due to their established market presence, large cap stocks are considered safer investments, making them a core component of a diversified portfolio. They are safer, because of the large size. They are considered safe relative to other market capitalization. Number two is mid cap stocks. Mid cap stocks. So as it relates to mid cap stocks, we want to consider growth potential. Growth potential. So mid cap stocks usually, these are usually companies with market capitalization below 2 billion, and between 2 billion and $10 billion. It strikes a balance between growth and stability. It maintains a middle of the road policy, between stability and growth. So they are typically in the growth phase of their business cycle, offering the potential for higher returns than large cap companies. They have a better potential for higher returns than what is obtainable with large cap companies. Then there's higher volatility. Higher volatility. While mid cap stocks can offer more growth potentials, they come with increased risks compared to large cap stocks. Making them suitable for investors with higher risk tolerance. They are relatively risky compared to large cap stocks. So when it comes to diversification, including mid cap stocks in your portfolio helps diversify away from more conservative nature of large cap stocks, offering opportunities for capital appreciation. It appreciates faster, than large cap stocks. Although it's more risky, sort of, but it appreciates faster than large cap stocks. So it's a very good instrument of diversification. Number three is small cap stocks. Small cap stocks. So it has higher growth potential. High growth potential. So small cap stocks typically, these are stocks of companies with market capitalization under $2 billion and are considered the most speculative but offers the highest growth potential. They are risky. They are considered sort of speculative in nature, but they offer the highest growth potential as compared to mid cap stocks and large cap stocks. You know, so they can experience rapid growth, but also there's also you could face significant risk. They are relatively risky. So we want to consider higher risk and volatility. The higher risk and volatility inherent, is a very important feature of small cap stocks. So small cap stocks are more volatile and can be more sensitive to economic downturns, making them suitable for investors with a high risk appetite and a long-term investment horizon. That is it. So if you have if you can tolerate risk, if you can stomach, a higher level of risk, and you have a long-term investment horizon, then you could go for small cap stocks. So there's this long-term focus. Long-term focus. Small cap stocks, can provide substantial returns over time if the company succeeds and grows. However, they are more likely to face challenges in the short term, making them more appropriate for long-term growth-focused portfolio. If you are growth focused and you have a long-term horizon, then you could include small cap. You could do with small cap in your portfolio. Number 4 is balancing the three categories. How do you balance the three categories? You balance large cap above 100 billion, mid cap above 10 billion, mid cap between 2 billion and 10 billion, and then small cap under 2 billion. So how do you balance the three categories? So you consider diversification. So a mix of large cap, mid cap, and small cap stocks help achieve a well-rounded and balanced portfolio. So large cap stocks provide stability, mid cap offers growth, and small cap provide high potential returns. If you've watched this video to this particular point, I want to share a little personal experience. Currently in my portfolio, I have about 10 stocks. Out of these 10 stocks, I have there are 10 stocks in the portfolio. I think the top 3 or so are large cap stocks, and the bottom 5 or 6 are small cap stocks. And it's something I've come to really experience. The smaller cap stocks at the bottom, they grow faster. they are more risky actually, with questionable fundamentals actually, but they grow faster. So I allocated just a little portion of my capital to them, whereas a higher level of the capital allocated to the upper, the bigger cap stocks. But the ones below, they are growing at a faster rate. They are kind of risky, but the returns, if you can stomach the risk, is worth it. So risk return trade-off. I want to consider risk return trade-off. Allocating a larger portion to large cap stocks can help reduce volatility, while increasing exposure to mid cap and small cap stocks can enhance growth potential. So usually they grow at a faster pace. Because of the limited share outstanding for small cap stocks, usually, sometimes you will come in to buy, you may not even see sellers. You see people lining up at the bids column or the buy column to buy. You may not even see a single a single offering in the offer column or the sell column. So all these are you simply key in your order and hope and pray that the order gets executed. You know, like I did today. Unfortunately, I couldn't buy. You know, people are lined up to buy, but there's no seller, and that's what really makes the stock to climb rapidly. When you have kind of people are willing to buy, but there's just that is just it's a simple economic principle. The higher demand, and then there's no, kind of a supply. Of course, the price will increase. You see them, they keep on climbing by as much as 10% daily. And now what I've just experienced in my portfolio now, it makes me somewhat happy. At least I'll be able to have something to to take care of my children and school fees by January, by next year. So rebalancing. So as our market conditions change, periodically adjust the proportion of each category to maintain your desired risk and return balance. Sometimes you may need to readjust. If the smaller cow stocks have grown to a level you feel you cannot really, you can sell and then allocate to the bigger cap stocks that are not displaying as much growth as the later, but at least the stability. So in conclusion, incorporating large cap, mid cap, and small cap stocks, into your portfolio allows you to balance stability, growth, and higher risk reward potential. It is a balance. At the top, the stability, like my portfolio, at the top, the stability. At the bottom, there's growth. So you just have to maintain that balance, But the growth tends to provide more money than the stability. But that maintenance, that balance is very important. A diversified approach with exposure to all three categories enhances long-term returns while managing risk.